It's time now for an in-depth look at the markets on this Tuesday, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Kiwoom Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
Well, Wall Street started the week mostly down, investors waiting to see what we get out of the Fed in terms of an interest rate cut. Here in Korea, a strong recovery today after Monday's rout. How's it looking today?
Yes, as you said, today there has been some rebound of the Korean equity market. On Monday, though, as you said, there's been quite a significant panic selling, and the KOSDAQ, which is a U.S. similar to NASDAQ, has shown close to 4% decline yesterday. Today, somewhat recovery, but it's only about a 1% recovery. Main reason for all this is because of the economic slowdown that's happening in Korea, and export growth rate is continued to be negative, and continuation of the Korea and Japan dispute is putting pressures on the Korean economy. Exclusion from the Japan's whitelist possibility is putting even further stress at the current point in time. However, though, global market seems to be fairly stable, with the Fed FOMC meeting is expected on the 31st of July, which is tomorrow night. And we are expecting a rate cut of 0.25% most likely. But we think that it's not going to be stopped there. Probably over the next 1 year or so, further rate cut of anywhere between 3 to 4 times expected. So therefore, the continuation of liquidity injection to the system for the global economy is most likely. If that's the case, then most of the Asian market, including Korea, will probably show some recovery with the currency appreciating versus dollars. Korean equity market did recover nicely today, whereas Nikkei also shows some recovery. Shanghai is also up. Shenzhen index is actually up more than 1%.
Right. Well, in the meantime, Korea's trade minister coming back from Washington says there's a lot of concern about Japan's trade restrictions in the American semiconductor industry. What do you think this will have, in fact, on the chip industry globally?
Right. If you look at the semiconductor index, DXI, it has shown continued decline up until July, and then in the last 1 month or so, had a very strong rebound. It's all about supply and demand issue. With Japan not deciding to prohibit the semiconductor materials related to the Korea, there's been continuation of worry about the production. So there's a strong demand by the global economy that the fourth industrial revolutions, as well as the data centers, these are all requiring a massive amount of additional demand, but supply problem could cause this will cause the DRAM price to rise. So everybody's worried about the supply chain at this point in time. Therefore, we think that U.S. will probably put some pressure to Japanese government in regards to prohibiting the materials to be sent to Korea. If that's the case, then I think overall it's net positive. So far, in terms of the share price movement of the semiconductor business for Korea, it really hadn't been a negative news per se. Most of the other sectors were heavily affected so far. We think that continuation of demand is likely case for the global economy in regards to semiconductor side, which is net positive for Korean economy.
Got it. Well, the U.S. will be putting some pressure on China, presumably. Their officials are meeting in Shanghai today for the first time in almost 3 months. Coming into these talks, where are the two sides, and what do you think they'll take away from this? Yes.
As you said, today's meeting is set to take place in Shanghai starting Tuesday. And Trump has said that he doesn't think personally China would sign a deal if we had a 2% chance of losing the election. That's what he said. Clearly, obviously, there's still a dispute between these two countries. China has restarted buying U.S. agricultural products, according to the Chinese media. And obviously, before this meeting, they're trying to show some good faith in regards to trying to settle this dispute. Clearly, the key factor is about the intellectual property issues and whether they can provide a law prohibiting any type of the technology transfer in a wrong way. So I think that negotiation will continue. In any case, we think that fourth industrial revolution is something that is here to stay, and both sides will be heavily investing in regards to this industry. So therefore, the demand of the both countries will be very strong in regards to this. The domestic economy, they're trying to boost that because trade dispute causes the much lesser trade. In order to sustain the growth rate for both countries, they will try to heavily provide some kind of boosting measures in regards to fiscal and monetary policies. So yes, we're not sure whether any kind of major settlement will happen between these two countries. But one thing for sure is that both countries will be putting additional boosting measures, which will be benefiting the domestic economy in terms of consumption.
It'll be interesting to watch. All right, Mr. Yu, that's where we'll have to leave it today. Thank you for coming on and sharing your insights.
Thank you very much.